Hi there and welcome back to The Money Show. Thanks so much for staying tuned to ET. Now, we have Pankaj Matpal back with us on board to talk about your mutual fund queries. Viewers, remember, keep writing to us and keep sending us your queries on either our WhatsApp number or you can also email us your queries on themoneyshow@etnow.tv. Now, there are a plethora of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio? What are the criteria that you should look like to help you navigate through all of this? We have Pankaj back with us on board. And Pankaj, I'm going to connect our first viewer's query with you. This viewer is connected with us via the phone line, and it's a query coming in from our viewer Krishnanand of he's aged 29 years, and let's just take it across to our viewer, and he'll be telling you his query, and we hope you can answer his question.
Hello.
Mr. Krishnanand, can we have your query, please?
Good evening, sir. Actually, I'm 29-year-old. I can right now I can do around 45,000 in total of investment. I am looking for long term. Actually, right now I am doing putting some amount in FD and around 22,000 rupees in mutual funds. Sir, I have 2-3 doubts. One is that I have selected DSP 50 Next 50 Index Fund, then Motilal Oswal Mid Cap Fund, PPFA's Parakparik Flexi Cap Fund, and Nippon India Small Cap Fund. So I am dividing it like 6,500 per month for Parakparik, 5,500 for Motilal Oswal, and 5,000 for Nippon, and 3,000 rupees for DSP Nifty Net 50. So actually, sir, my doubt is, one is that is it actually good to do SIP in mutual funds, or is it should I do SIPs in stocks also? And the second one is, sir, while doing this, while screening all the mutual funds, sir, in my portfolio there is Parakparik and Nippon. Both have AUM of more than 60,000. PPFA is 82,000 and Nippon is 62,000. So in PPFA, small cap allocation is really less, and going to Nippon. Nippon small cap it's around 62,000. So the small cap allocation in future, will it be difficult? Should I change the funds that I have selected? And is there anything should I add, and any difference should I do with my allocation?
Okay, so Pankaj, that's the query coming in from our viewer, Mr. Krishnanand. What's your take on that, and could you help him out, please?
Yes. Krishna, I understood your question. See, first thing, the question is whether you should invest in stocks and mutual fund both or only in mutual funds. My suggestion would be that you should invest in mutual funds. And in addition to this, you can invest in ETFs. So exchange traded funds can be another choice, but directly in stocks, if you understand market well, you have time for research and you have access to research, you can invest in stocks as well. But for most of the investors, investing through mutual funds route in equity is a better choice. So my suggestion would be that you should prefer investing in mutual funds and some ETFs like Nifty 50 ETF, Nifty Next 50 ETF, or some even Smart Beta ETF can be in your portfolio. So now coming to mutual funds, your question is how you can have allocation in small cap, and two funds you have selected. One is multi-cap, another one is flexi-cap. And apart from that, already you are owning this DSP Nifty Next 50 Index Fund, which is a large cap fund. Definitely, you should continue investing in this. Motilal Oswal Mid Cap Fund is another good choice. Quant ELSS Tax Saver Fund, what you have, that will help you in saving tax only if you are in old tax regime. So you have to decide whether the old tax regime is suitable for you or you want to switch to new tax regime. If you are in new tax regime, then my suggestion would be that you can skip this fund in your portfolio, because ultimately, otherwise, other open-ended multi-cap fund, flexi-cap fund like you have in your portfolio will be a better choice. Tax saving funds should be in your portfolio only if they are giving you benefit of tax saving, and under new tax regime, that deduction under section 80C is not available. So that you can decide. Now coming to your Nippon India Multi-Cap Fund and Parag Parikh Flexi Cap Fund, my suggestion would be that you can invest in both of them, because Parag Parikh Flexi Cap Fund has major allocation in large cap. But if you want allocation across large cap, mid cap, small cap, that Nippon India Multi-Cap Fund will be a good choice for you. So both the funds are good and you can invest in both of them. But now allocation, what I would suggest to you, like DSP Nifty Next 50 Index Fund, you can invest 7,000 rupees per month. Quant ELSS Tax Saver Fund, you can invest 5,000 rupees per month if you need it. Motilal Oswal Mid Cap Fund 5,000, Parag Parikh Flexi Cap Fund 8,000, and Nippon India Multi Cap Fund, which will give you exposure across large cap, mid cap, and small cap. You can invest 10,000 rupees per month in this. So total amount, what you had decided for equity shares and mutual fund, I have divided in there are 5 schemes of mutual funds.
Okay, that sounds really good. Pankaj, thanks for helping our viewer with that query. And let's move on. Then I'm going to ask you the next query that's coming in from our viewer. His name is Siva, and this is an email query. So I'm going to read this query out to you. He has a mutual fund portfolio for a monthly SIP of 1.25 lakh rupees for the direct growth funds, with 25,000 invested in each. So he has his portfolio spread across 5 funds, and that's Edelweiss Balance Advantage Fund, Edelweiss Aggressive Hybrid, Kotak Multi-Cap Fund, JM Flexi Cap, Nippon India Ultra Short Duration Fund. Could you please review his portfolio, his allocation to all of these as well? And he's planning with a time frame of 5 years. So what's your advice on this front?
Yes, Snehi, considering 5 years investment horizon, these funds are good. Most of these funds are good because there are hybrid funds as well as there are multi-cap and flexi-cap fund. But one fund, Nippon India Ultra Short Duration Fund, this is a debt fund. And in debt category also, it is a low risk debt fund. So if your investment horizon is 5 year, Siva, my suggestion would be that you should switch from this debt fund to an equity fund. And for this, I would suggest you Nippon India Multi-Asset Allocation Fund. So you are not changing your fund house from Nippon India Ultra Short Duration Fund. I'm suggesting you to switch to Nippon India Multi-Asset Allocation Fund. And this fund invest in equity, debt, and gold, etc. So for 5 years investment horizon, and considering the current market condition, this will be a good choice for you.
Okay, well, on that note, I'm afraid, viewers, we are completely timed out on this episode of The Money Show. But on that note, viewers, keep writing to us because we will be taking your queries going ahead. Pankaj, thank you so much for joining us on the show and taking the time out to help our viewers the concept of fractional ownership as well as answering their queries so candidly. But with that, viewers, it's time's out on this edition of The Money Show. From me, Snehisha, and the team that put this show together, thanks so much for watching. Keep writing to us on our WhatsApp number and our email ID.
If you like this video, then like, share and subscribe to ET Now.